This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Hello again from TF Metals Report, and welcome to your podcast highlights for the last week of July, first couple of days of August 2024. Again, a daily podcast, just part of what you get as a member of TF Metals Report. Great community, analysis every day, fair, objective analysis to really keep you up to speed on what's going on. I strongly suggest you join us. Anyway, back on Monday of this week, the 29th, discuss a number of things. The pending August gold contract going off the board and how that was impacting the price of the August contract. The chart you see from that day was reflecting the August contract. Soon we would roll through the December contract and pick up about $50 worth of contango. But anyway, back on Monday, July the 29th, the discussion was the August contract of COMEX Gold and where it might head this week. Okay, and then finally to your charts. Again, now this is still the August gold. See this GCQ 2380 is where it's at. So I misspoke. So we got $48 right now of contango, because the December gold is up one at $24.28, and that's the price we're going to start quoting and charting tomorrow. But for today, we're still looking at the August because this is what we're used to. As you can see, it tried to get to 2400 day at its highs, got it like 2401 maybe, turned right back down. If anything, you could say that it held support at the 50 day. For now, it's just right in here. Now, a wave counter might look at this and go, there's one more plunge coming. They like those, A, B, C, D, E, 1, 2, 3, 4, 5. And from that peak 2 weeks ago, 1 down, 2 up, 3 down, 4 up, and then 5 down to like 23.20, where that support has always been. Okay, I'm no wave counter, but I could. These little flags here, 2 or 3 day flags. I'd rather not. And we're certainly still within the general consolidation phase. But for now, at least, if anything, we are holding the 50-day. I'll leave you with that. I was out and unavailable all day on Tuesday the 30th. Wednesday the 31st. That was FOMC day, the conclusion of the July FOMC meeting. The Fed lines, the Powell press conference made it pretty clear there ain't going to be no more rate hikes. And in fact, rate cuts are coming. Gold responded by moving higher. It was also the end of the month of July, and so what you see here is the monthly chart of the spot gold price. Finishing up the month, I believe 2447. That is a new all-time monthly closing high, and as you can see, this chart looks great. All a part of what we discussed on Wednesday, July 31st. And finally, end of the month. So let's look at those monthly charts. Gold, as I mentioned earlier, on the month, spot gold up $125. So after finishing at an all-time quarterly high back at the end of June, price responds with this really solid green candle. Look at that, 5 solid months in a row. 24.49 when I printed this. 24.47 is where it closed at 5 o'clock Eastern. Damn near higher than the 24.49 intra-month high from back in May. But anyway, that's pretty solid stuff. The new month began on Thursday, August the 1st, and a conundrum, something we've been watching now for several weeks, is that gold has been rising, but silver has been going sideways. Now, bank interference has a lot to do with that, but copper interference does as well. In fact, the price of COMEX copper is down nearly 20% since the high seen back in the middle of May. Think of it this way. Think of it like a seesaw. Gold on one end, copper on the other, and silver in the middle. Gold goes up, copper goes down, silver doesn't move much. They all go up together a lot of times. But right now, gold's rising, copper down and looking even lower as we review this chart from Thursday, August the 1st. Let's look at this chart of copper. Look at that. From May the 17th, it was north of $5 a pound to today down to $4 a pound. And look at the outs, just when it looked like it was trying to recover yesterday, look at that totally engulfing bearish candle today. Copper going, what, 380? 375? I mean, it's going to completely retrace all the way back to where it was at the beginning of February? Looks like it. And again, how can silver go up if copper keeps going down? Like I said, gold on one side, copper on the other of the seesaw, and silver in the middle. Gold goes up, copper goes down, silver just kind of sits there. August the 2nd, first Friday of the month. That means it's the latest from the BLS. The BLS-BS, as we call it, the latest U.S. jobs report. And this time it was miserable, just dreadful. Clearly the U.S. is slipping into the recession that many of us have been expecting. The Fed, just like they did with the whole transitory nonsense that made inflation worse, has steadfastly held on to the wrong information, thinking the U.S. economy was hanging in there, and now they're going to be too late to cut, and the recession is going to be worse. Now, despite a massive rally in the bond market, a plunging dollar index of more than a point, rate cut expectations surging to maybe a 50 basis point cut at the next FOMC meeting, both COMEX gold and COMEX silver were smashed during the trading hours and turned negative on the day. As you can see on the chart in front of you, this is the third time this week that COMEX silver was smashed in the 10 o'clock Eastern hour. That is the hour that immediately follows London closing with the London PM gold fix. It's actually the 11th time in the last 20 days that this has happened. Reeks of a desperate bank short, desperate to contain price to limit their future paper losses, trying to keep price below $29 and bouncing back into the 30s. Desperate times come for desperate measures, and that's what you're seeing. How much longer will this continue? Well, that's hard to say. The key thing that you can do to help out is to acquire physical metal. More physical metal in our hands, less that the banks can use to leverage and control the price. It'll get away from soon enough. This is all very positive news for the precious metals, so I don't want to spend too much time dwelling upon the fact that we got smashed again today. Just use the price weakness to your advantage. If someone's willing to sell you some silver for about $30 an ounce, take them up on it. That'll do it for this week at TF Metals Report. Thank you for listening to these podcast summaries. I hope you find it helpful. If you want full podcasts and full access to all the information at TF Metals Report, it's only $15 a month or 50 cents a day. Now's the time to join. Go to tfmetalsreport.com for more details. Thanks for listening, and we'll have another one of these podcast summaries for you next week.